Hello Forex Mentor Pro members and fellow Forex traders. My name is Omar El-Tuki, and while Mark is enjoying some much-deserved time off, I jumped at the opportunity to do his blog. As an original member of Forex Mentor Pro and a student of Mark's, I am here to give my analysis for the week commencing August 4th. Many of you, like myself, joined Forex Mentor Pro to learn the real way to trade. And since I now make a full-time living from Forex, I wanted to take this opportunity to share with you that your dreams are not as far away as you might think. Whether your dream is to use Forex as an extra form of income or to make a career of it. When I started with Forex Mentor Pro, I had a common story to many of you, exhausted with all the different systems and promises so many slick marketers make, and after spending so much money on various methods, education, and quote-unquote experts, I was happy when I found Mark Walton and actually started to learn something real about trading. I am not here to replace Mark in any way, but rather to hopefully guide you to some great trades throughout this week using the methods I learned at Forex Mentor Pro. Thank you for taking the time to share this with me. Let's get to some Forex analysis. Alright, our first pair for analysis is the Euro USD, and here I have it on the monthly chart. I always find it helpful after each month ends, and since that happened at the end of last week, to check out the monthly candle that just closed. What we have here is a July candle that is looking rather bullish as it has a larger green body. Keep in mind that these purple lines form a triangle, and this triangle has been in place for quite some time. This is a monthly triangle, and the upper trend line goes all the way back to spring of 2011, while the lower trend line goes back to early summer of 2012. So this triangle has contained price for quite some time. One thing we do notice is that price broke out of the triangle but did not finish the month as a monthly breakout. So price continues to get squeezed tighter and tighter into the point of the triangle. Also, which is very interesting, is that for the month of July, the upper region of price got up to the 55 EMA on the monthly, while the lower region of price was contained by the 200 EMA. So essentially, we had a July where price was squeezed and sandwiched in between the monthly 55 and the monthly 200. When we examine the Bollinger Bands on the monthly chart, we find that they are rather far away from price and open, and this allows price to move rather freely. So we are not getting into a situation where price is getting too compressed, but rather there is lack of clear direction, and we find this often in the summer. Most big moves do seem to be made in the spring or in the fall, and as we get to summer, price has a hard time breaking new areas. So let's see what we can find out from the weekly chart. Now on the weekly chart here, we have a little bit more clarity and a little more information. What we are seeing is that price is essentially meandering up and down. A couple months ago we had a major Fed statement as price approached 1.3400, and Big Ben and friends said that they would probably ease up on the stimulus, and that strengthened the dollar significantly and caused the euro to fall. Well, it came all the way down to 27.5 when they decided that instead, because of the jobs picture, that they were going to continue their stimulus, and this sent the euro right back up. So from the weekly, what we seem to have is a bit of lack of clear direction. And price is capped off heavily at 3,300, and again, the downside at 27.5. Of course, how are we going to trade this? Well, let's check out the situation on the daily chart. Alright, here is the daily. Now what we have on the daily chart is clearly a price that seems to be going sideways, but 3,300 has come into play quite a bit and stopped price cold on many an occasion in recent history. We spiked above it a little bit, but came back in. Where do we stop to the downside? It seems to be 3,200. So price, be smart to say, to short from 3,300 at the moment and long from 3,200. Of course, we could always get the breakout. I want you to notice the upper Bollinger Band has swung open, suggesting that price, although capped off before, may now break above this area of 3,300. So the first opportunity would be to short at 3,300. If price continues on through, we would wait for a breakout, a pullback, followed by a nice long signal at 3,300. Of course, I would wait until it breaks and closes above 3,300 on the daily. Now, what if price comes down? Well, the first place to long would be at 3,200, and this would stay within that 32 and 3,300 range. If price does decide to come out further, which could very well happen, we would wait for a daily break of 3,200, followed by a pullback, and then a short. This is even more visible on the 4-hour chart, which let's check that out. You can clearly see from the 4-hour chart that 3,300 has been a very big area of resistance, and price has tried multiple times to break through it and has failed. Every time it breaks above, it comes back down. So again, shorts from 3,300 and longs from 3,200 until we get a breakout of either area, and then a short below 3,200 or a long above 3,300. But the market will have to decide. So now that we know what to do with the euro, let's see what's going on with the pound. Alright, here we have the pound on the monthly, and let's see what we can find out about last month's candle. July's candle is a spinning top, and certainly is indicative of no clear trend. The month prior, June, is the same pin bar formation we saw in the euro, which would be great if it happened here after the end of a good run up, but the prior candle was a bearish one, immediately preceded by a bullish candle. So this pin bar does not really tell us much, and our spinning top from July doesn't either, other than the fact that price was halted yet again at around 48.30, and that the top of last month's action was around 54.25. Interestingly enough, we ended up closing below this important area of 52.70, which is both a support and resistance and a daily 55 EMA. You can see this upper trend line has not been breached, and it has been in place since the fall of 2012. So we will have to go down to the weekly chart and see if we get any clearer of a picture. And here is the pound USD on the weekly. As you can see, price does appear to be moving sideways in a rather large range, with 48.30 being at the bottom and this upper trend line capping it off. For the last 2 weeks, 54.25 has been the top of the range. And you can see that last week's price action, although we spiked below it, we ended up staying within between 52.70 and 54.25. So let's go down to the daily. And what we find here on the daily is that the 200 EMA has served as a good upper boundary for price. Price has rejected from this area on multiple occasions, while being a little bit choppy, breaking below the 55 EMA, and then finishing the week inside it. So going forward for the week ahead, I would look for shorts off of 54.25 or a little bit below that, as the 200 EMA does seem to be descending, and if we get a slightly better move up, look for pullbacks to 52.70 for longs. Of course, if price does decide to make a break, look for breakouts above the 200 EMA, followed by a pullback to go long. Keep in mind that that upper trend line and the 55 EMA, I believe on the weekly, which it is, will be upper resistance, but another place to look for a short. Of course, if we get a better breakout to the downside of 52.70, we look for pullbacks to take a short, and that will take us hopefully all the way down to 1.5, which has been an area of support and resistance in the past. So if it does decide to stay range bound, look for shorts at 54 1/4, longs around 52.70, but a breakout of either area will produce longs above 54 1/4 and shorts below that area. Price is not really clear on this pair at the moment, so if you have any doubt, as Mark always says, stay out. Let's see about the Aussie. Alright, here we have the Australian dollar versus the US dollar on the monthly. And this pair has been a lot of fun to trade. We had a long time sideways action, and what we would expect from this is a breakout. We finally got a breakout a few months ago, and price has plummeted ever since. Now, one thing to keep an eye on is the fact that we have moved outside the Bollinger Bands for the last 2 months, and this is usually an untenable position. Price usually, it's like a rubber band. Once it moves outside this, it does have a tendency to snap back. Also, we've had 4 straight months of falling, and you can see that every month the move has gotten a little bit smaller, and price may snap back inside. So we have to be careful of that. But in the meantime, it does seem to be a very bearish pair, and we, as of the end of last month, as you can see from July's candle here, we broke below the whole number of 9,000. Let's go ahead and take a look at the weekly chart. Now, interestingly enough, on the weekly chart, we have stayed back within the Bollinger Bands and have made a very nice little breakout of 9,000. So immediately, first thing I would think is look for a pullback this week to 9,000 so that we can short, with our target being 87.5. There were lots of opportunities in prior weeks to short from 9,300. 9,300 was good for weeks on end as we moved up and down a little bit while never re-breaking 9,300. Last week we saw a pretty hard fall to break 9,000. So certainly for this, I would definitely look for shorts at 9,000, keeping in mind that we may end up getting a retrace at some point much deeper. And if we do, 9,300 would be my first place to look, followed by 9,400. Let's go ahead and take a look at the daily chart just to see. And here we have the pair on the daily chart, and you can see once again there were tons of opportunities to short at 9,300, but we finally broke out. The Bollinger Bands have swung open, signifying that price can continue to fall, and I would definitely be interested in a short at 9,000. If price does decide to reverse, we would look for a daily breakout of 9,000 to the upside, followed by a pullback to go long. Again, if we do get some massive pullbacks, 9,300 is a great place, or it looks like a great place, to go short again, as we have the daily 55 coming up to meet us, as well as a prior point of support and resistance. But for the moment, if it stays as bearish as it is, a pullback to 9,000 would be my desired place to go short. And now that we've looked at these majors, let's go ahead and check out the Euro Pound. Alright, here is the Euro Pound on the monthly, and just like with the other pairs, let's see what we can figure out. July's candle was a very nice bullish candle, which after 3 months of price being stuck between 8,400 and 8,600, we had a solid breakout. We did not quite break the triangle though, a monthly triangle that has been in place since the summer of 2011 on the upper trend line and the summer of 2012 on the lower trend line. And you can see that price, even as this month's start, has pulled back into the triangle. But 86 definitely looks like a good target to look for a long, and let's go ahead and move down to the weekly. And from the weekly we can see that 8600 has provided a nice support area for the last few weeks after getting the breakout. Our Bollinger Band has swung open now, suggesting a potential price move upwards. So if price does not pull back to 8600, we can always look for the breakout of this trend line. And if we get a nice breakout on the weekly or on the daily, we look for a breakout and a pullback to go long, and that is going to be at right around 87.5. So let's check out the daily just to confirm. And from the daily chart here, it seems that we've made an attempt to break out of this triangle, but we've broken outside the Bollinger Bands, and as price hit this upper trend line in the Bollinger Band, it has come right back in. So the Bollinger Band on the daily has slammed shut, suggesting a potential move downwards. We might get back down to 8600. Seems like a great place since it is also the daily 55 EMA. So that is certainly where I would be looking for my first long, is at 8600. Of course, if we break out above the triangle and the Bollinger Band stays open, we can also look to long above 87.5. And that is where I would look for longs. Potentially, if price does not break above the trend line, we can look for shorts at the trend line, but since we have a nice uptrend in place, that is counter trend, so use caution. But longs from 8600 seem to be the best way to go unless we get a breakout above this trend line. And let's see about the yen crosses now. And here is the US yen on the monthly. Now what we see here is, after a very long uptrend that started in the fall of 2012, we reached its zenith right at the end of the spring session at 103 3/4. Ever since then, price has been moving down. Once again, we see another triangle formation here, with the lower trend line being in place from the beginning of 2013, the upper trend line starting at the beginning of the early summer. It looks as though July's monthly candle is bearish yet again, and this would make sense to now look for shorts. Well, let's check out the weekly and see if we can find some trades. Now here we have on the weekly, and since it does seem to be going in a downtrend, we can put in another trend line for near-term price action. Makes a nice little channel here. I would say that the best looking trade is a pullback to the nice whole number of 100, which will also correspond with the trend line. Of course, if we get downward movement, we can always look for bounce trades at 97.5, which would correspond with the lower end of the channel. Everything in the middle seems to be a bit messier. So certainly I would be looking for pullbacks to 100 for a short, or falls to 97.5 for a long, to keep it within this channel. Of course, any breakouts of the triangle in the upper trend line, if we broke out above 100 and we got a pullback to 100, we could look for a long there. It's pretty simple. This does seem to be in a downtrend at the moment, so shorts are the order of the day. It may only get up as high as 99.5 though, as this has also been an important area of support or resistance. But the ideal spot for me is 100, as we know whole numbers are very important. The Bollinger Bands are far away from price, indicating that price can probably move very freely. And so that would be for the US yen. But let's check out the other yen crosses. Now the euro yen, definitely one of my favorite pairs to trade, and the pair that I've made my biggest trade of all times on. And as we can see here from the monthly chart, we seem to be in a pretty good uptrend, although the last few months, as summer goes, has moved us into somewhat of a sideways area. You can see from July's candle it is bullish, yet it is almost a spinning top. One important thing to notice here is the role of the monthly 200 EMA, as it has supported price and kept the body of price within or above it for the last 2 months. So this area, the 200 EMA on the monthly, seems to be very important. Price has stopped at 132.5 to the upside, so let's go ahead and check it out on the weekly to see if we can figure out where to trade from. As we can see here on the weekly, we have a nice little uptrend going for the last several weeks, and this trend line has held price for quite some time. Now notice I've put in this horizontal support and resistance of 130.70. You can see it's played its part on multiple occasions in the past, and does seem to be, for some reason, a very important area of support and resistance. It's held price on several occasions. It seems to be very hard to break above. 1 week we get above it, and last week before last we stopped at 132.5, came back down to the trend line last week, and now we are above 130.70. So where do we go next? Well, quite simply put, a pullback to 130.70 is going to be near or at the trend line for a long, and this would be my preferred trade. Of course, if we get up to 132.5, we can always short from that area. And then beyond that, if price does make a larger move up, we would look for a breakout of 132.5, followed by a pullback to go long. And let's check out the daily just to get the clarity. And so here we are on the daily chart. In addition to the trend line, we also have the daily 55, which seems to be supporting price for some time now. A pullback to this area again, 130.70 would be my ideal place to go long. The Bollinger Band on the top does seem to be very close to 132.5, so if you do catch along, make sure that 132.5 is your target, and to adjust your trade as you get close to there. Of course, if we break the trend line and we have a breakout to the downside, I would be pretty wary, because we have this very important monthly 200 right below. So ideally 130.70 is the place to look for a long, and go from there. Let's check out the Aussie yen and see if that's got a different story. Alright, here is the Aussie yen on the monthly. Now, as you can see from my trend line and from the last major move it made, it was in a very strong uptrend until it capped out at 105.5. This is where I've made the fib. It's from the low to the high, and you can see that it did struggle around 90, which was a 50% retrace, but broke through it. So looking at July's candle, it was bearish and it broke below the whole number of 90. For those of you who are fortunate enough to short from 93, that was a very nice move. That's where I was looking, but I was not at the monitor when it happened, so I missed it. But now that we've broken below the trend line and below 90, we have a couple different options. So here we see this pair on the weekly chart, and the Bollinger Bands are wide open, so movement is possible. And after this trend line had held price for quite a few number of weeks, we finally broke below it last week. Now, going forward, I would certainly, if you wanted to short this pair, since we had this trend line breakout, I would look for a pullback to the whole number of 90. For those of you who still want to trade this long, we have a very, very nice area coming up that has many, many reasons that price should struggle, and that's going to be at around 8,600. We have a 200 EMA on multiple time frames, the 55 EMA, as well as the 61.8 fib retracement of the last major move up. So depending on which way you want to go, either look for pullbacks to 90 for a short, or we can look to 86.25 all the way down to 86 for longs, and there are many good reasons at this area for a long. Of course, if price does continue to plummet, we would definitely want to break free of this area, look for a pullback with a view to go short, with 81 being the last line in the sand for the last major move up. So quite a few different options, either long or short on this pair. If price does reverse and head back up at this point, I would certainly wait until all this area is clear, this mess in here, and I would not want to long this pair if it makes a move up until we are clear of 93.5, and then we'll look for a pullback to go long. So a few different options on this pair, but most of them look technically very good. So longs at 86 to 86.25, or shorts at 90. With, I believe, 88 is an intermediary support and resistance, but does not have more than just the one horizontal area. And certainly last but not least, let's check out the old CAD. Alright, and here is the US CAD on the monthly. This pair is also known as the loonie for very good reason. To say this is my least favorite pair would be an understatement. In fact, I don't even bother trading it anymore. If I want to get some Canadian dollar action, I trade the Euro CAD. It just seems to work out better for me. But nemesis or not, here's how we go. Here we are on the monthly chart. You can see that July's candle was a very bearish one, which makes sense because the prior month snapped out of the Bollinger Band, and price has returned within the Bollingers. So, although we are in an uptrend, the last month saw us shoot down, and we closed the month under the monthly 55 EMA, but above the weekly 200. So already we've pulled back up to 1.0400, and let's go down to the weekly and check it out on a little better deal. Now for me, this definitely still looks as it's going in an uptrend. You can see a little more clearly here with a weekly trend line. We also have the weekly 200 EMA down here at around 1.0300. So if we do want to long this pair, I would wait for a long at 1.0300 for a long. Of course, I think the preferred trade here is to wait for a breakout of 1.0400 with a pullback to go long, and watch out as we get around 1.0560, 1.0575. Of course, like I said, if we get a pullback to 1.0300, that would be another area for consideration. But considering that there's a lot of action going on in between those points, I would definitely wait for a topside breakout of 1.0400 before attempting a long, or you could short below this area if we get the short breakout of the monthly 55. But my preferred long area is around 1.0300. So that's going to do it for this beginning weekly analysis. Hopefully we get some really great trades this week. Since we had such a big onslaught of news last week, we have paved the way for hopefully some movement and potentially summer ranges, but we understand that support and resistance leads the way, and we'll be watching those areas. I'll be back with you again Wednesday to see if any of these trades came to fruition. I wish everyone the very best and happiest trading. Thank you so much for your time, and I appreciate you letting me do this. I hope Mark enjoys his time off, and I'll be talking to you soon. Take care and happy trading.